Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Okay, it's Thursday, May 1st, 2025. Looks like a sunny day here in Sacramento, high around 85 degrees later.
Nice day for it.
Yeah. Quick look at the markets from yesterday's close. That's Wednesday, April 30th. Dow closed at 40876.08. And the S&P 500 ended at 5614.26.
Okay.
Welcome, everyone, to Connecting the Dots. We're from Snarful Solutions Group, right here in Sacramento.
That's us.
And what we do is take the big tech stories buzzing around and, well, connect those dots to figure out what it all means for you.
Yeah, trying to make sense of it all. And today we've got 3 pretty significant stories lined up.
We do. Definitely worth digging into.
Absolutely. We've got a major court ruling hitting the App Store, then there's Meta going all in on AI, and finally, a really interesting U.S.-Ukraine deal involving critical minerals.
Yeah, stuff that could actually have some real-world ripple effects.
For sure.
So let's jump right in with that first one. The whole Apple App Store situation. Sounds like a U.S. judge really came down hard on Apple.
They did. The judge basically ruled Apple violated a court order from back in 2021.
The one about third-party payment options, right?
Exactly. And it's been referred for a possible criminal investigation, which is, well, that's serious.
Okay, remind us, what was the core issue with that 2021 order?
So the original injunction, it required Apple to let developers tell users about other ways to pay outside the App Store.
Like putting a link in the app to their own website.
Precisely. Include links, point users to the web, basically open things up beyond Apple's payment system. The idea was to boost competition for in-app stuff.
But Apple didn't exactly roll out the welcome mat, did they? The judge said they willfully chose not to comply. That sounds pretty blatant.
Yeah, the judge's language was strong. The finding was that Apple wanted to protect that App Store revenue, even though parts of it had already been flagged as anti-competitive.
So how did Apple try to, work around it?
Well, instead of just allowing direct links freely, they set up this system where they'd still charge a 27% commission on purchases made outside the app if the user found out about it through the app.
Wait, 27% even if the payment happened elsewhere?
Yep. And they put up roadblocks. Things like scare screens, warning users about leaving the app, static URLs you couldn't click, really generic language allowed for developers.
So making it as difficult as possible, basically.
Pretty much. The judge saw right through it, calling it an attempt to undermine the whole point of the original ruling.
And the judge used terms like insubordination and a gross miscalculation. Wow.
Yeah, and even mentioned potential lies and misrepresentations under oath from Apple's VP of Finance, Alex Roman, about how they understood the fees.
That's taking it to another level. Accusations under oath.
It really shows how unhappy the judge was with Apple's response. And interestingly, there might have been some disagreement within Apple about this.
Oh, like who?
Well, reports suggest Philip Schiller, who's in charge of the App Store, actually had concerns. He apparently questioned if this commission plan was even legal under the injunction.
Huh. But the finance guys pushed it through.
Seems like CFO Luca Maestri and Alex Roman were the main advocates for that commission plan. It points to maybe different ideas inside Apple about the App Store's future.
So this new ruling, what changes immediately?
Okay, immediate impact. Apple is blocked right now from charging those commissions on off-app purchases found via the app.
Okay, so the 27% thing is gone.
Gone. And all those barriers for developers, the scare screens, the static links, also gone. They have to allow clear communication, actual buttons, direct links to external payment options.
That's a pretty big shift then.
Huge win for developers.
Yeah.
And you saw Tim Sweeney from Epic Games celebrating, right?
Yeah, I saw that. He called it the end of the Apple tax in the U.S.
Exactly. He compared it to the Digital Markets Act, the DMA, over in the EU.
And is Fortnite really coming back to the App Store? He mentioned maybe next week.
That's what he announced, yeah. Potentially next week for the U.S. App Store. And he even threw out this idea of a global truce if Apple applied this framework everywhere.
Wow, that would be massive.
It would be. It really could change the whole landscape for apps globally. More choice, potentially lower prices for users everywhere.
Okay, so let's connect those dots for people listening. What does this actually mean for you?
Well, the big potential change for you is cost. You might start seeing lower prices for subscriptions or those in-app items.
Because developers won't have to pay Apple that cut if you pay on their website.
Exactly. If they save money, maybe they pass some of that saving on to you. Plus, it should just be easier to find and use those other payment options. Less friction, more transparency within the app itself.
So clearer options, potentially cheaper stuff. Got it.
That's the hope, yeah. More control for the user.
All right, let's move on. Story number 2. Meta, Facebook's parent company. Big earnings call, good revenue, but also spending a lot on AI.
A lot. Yeah, Q1 revenue beat expectations. Their Q2 forecast looks solid. Ad revenue is holding up strong.
But the big headline was the spending, right?
Yeah.
On AI.
Definitely. They're ramping up their capital expenditures. There's their investment in things like AI data centers, all the underlying tech, significantly.
How much are we talking?
The estimate for the year is now $35 billion to $40 billion. That's a huge number, even for Meta.
And Zuckerberg is basically saying, hold on, this won't pay off right away.
Yeah, he's managing expectations. He told investors it'll likely take several years for these AI investments to really show significant returns. He's pointing to past examples like their investment in Stories or Reels that took time but eventually paid off big.
Playing the long game then. Betting big on AI being the future.
Absolutely. He's signaling this is a core strategic direction, even if it means lower profits in the short term. It's a calculated risk.
And they already have ideas on how to make money from it, right? Monetization.
Oh, yeah. Zuckerberg mentioned specific plans. They're going to put ads in the Meta AI app.
Okay, that's not too surprising.
And they're also planning a paid tier, a subscription that gets you, quote, more compute and additional functionality.
So a freemium model, basically. Basic access with ads or pay for more power and maybe no ads.
Looks like it. It's a pretty standard playbook in tech these days. Offer a free entry point, monetize with ads, and offer a premium upgrade.
And this is tied to their new AI model, Llama 3.
Right. Llama 3 is their latest large language model. It's powering the Meta AI assistant, and they're integrating it across Facebook, Instagram, WhatsApp.
How does it stack up? Is it better than ChatGPT?
It's powerful, definitely a big step for them. Reviews suggest it's very capable, though maybe not quite beating OpenAI's latest GPT-4 across the board on all benchmarks. But it's getting integrated everywhere in Meta's world.
Okay. And what's this about trouble in Europe? A big fine.
Yeah, separate but related. The European Commission hit them with a $200 million fine.
For what?
Violated the Digital Markets Act, the DMA. The EC says Meta wasn't complying with rules meant to ensure fair competition.
And Meta's fighting it.
They plan to appeal, yeah. They argue that the ruling could actually lead to a worse experience for users in Europe and hurt their business there.
So more regulatory battles.
It seems to be the norm for big tech, especially in Europe. The DMA is really starting to bite.
So connecting the dots on Meta, what's the takeaway for you listening?
Well, expect to see AI becoming much more visible in your Facebook and Instagram feeds, in WhatsApp, powered by Llama 3.
And ads in the Meta AI app are coming, plus that potential subscription option for power users.
Exactly. It's part of that broader trend. AI is getting woven into everything, and companies are figuring out how to pay for it.
And if you're in Europe, that DMA ruling could mean some changes to how Meta services work over there. Something to watch.
Definitely. The regulatory side is constantly evolving.
Okay, final story. This one feels a bit different. A deal between the U.S. and Ukraine involving minerals.
Critical minerals, yeah. It's a pretty significant agreement. The U.S. is essentially gaining access to Ukraine's reserves of things like titanium, uranium, lithium, graphite, manganese.
Stuff that's really important for it. Well, lots of modern tech, right?
Yeah, crucial. Aerospace, batteries for electric vehicles, renewable energy tech, electronics. These minerals are fundamental. So strategically, this helps secure the U.S. supply chain for these vital resources.
And it's not just about minerals, is it? It seems linked to U.S. support for Ukraine.
Absolutely. It's framed within the context of ongoing support amid the war with Russia. The deal is being done through something called the United States-Ukraine Reinvestment Fund.
How does that work?
It's set up as a 10-year partnership, intended to be equal. And the U.S. contributions are structured so they count as new military aid, but in cash form.
Interesting. So it ties economic access to security assistance.
Precisely. It provides Ukraine with ongoing U.S. backing, which is vital for them, especially with, potential political shifts or concerns about future support levels.
And we saw some political reactions here in the U.S. President Trump commented on it.
Yeah, he was quoted saying that, in theory, the deal means the U.S. gets more out of it than it puts in, stressing the need for the U.S. investment to be protected.
Kind of a transactional view.
That's one interpretation. Ukraine, on their side, views it as strategic. They see it as a way to attract more global investment generally and secure that U.S. military aid. They called it an equal and good international deal.
And all this is happening while peace talks are, well, struggling.
Yeah, the backdrop is difficult. Peace negotiations between Russia and Ukraine seem to be moving very slowly. Both sides have different conditions for even a ceasefire.
And the human cost continues. Reports of civilian casualties rising again.
Sadly, yes. A recent UN report highlighted a significant jump in civilian casualties earlier this year and another rise in April compared to last year. It's a stark reminder of the ongoing severity of the conflict.
So connecting the dots on this one for our listeners, what's the relevance?
On a bigger scale, it really shines a light on the global scramble for critical minerals. These resources are the bedrock for so much tech, especially the green transition EVs, renewables.
So it shows how geopolitics, resource competition, and technology supply chains are all tangled up.
Exactly. Where we get these materials matters. And this deal shows the U.S. making a strategic move to secure access through a key partner in a volatile region.
And it also keeps the spotlight on the ongoing conflict in Ukraine and its human impact, which underlies this whole agreement.
Absolutely. You can't separate the economic and strategic aspects from the harsh realities of the war. It impacts supply chains, energy prices, and of course, lives.
Okay, quite a range of stories today. Let's maybe try to wrap this deep dive up.
Sounds good.
So first, we saw the App Store model facing serious legal heat. Apple's being forced to open up payment options, which could mean real changes, maybe even savings for you when buying apps or subscriptions.
Right. Then Meta, making huge long-term bets on AI. Expect more AI features woven into everything they do, alongside new ways they'll try to monetize it, like ads and subscriptions.
And finally, that U.S.-Ukraine minerals deal. It highlights just how crucial these resources are for modern technology and how geopolitics plays a massive role in securing them, all against the backdrop of the ongoing war.
Yeah, 3 stories showing tech's deep connections to law, to finance, to global politics, and ultimately to our everyday lives, whether it's the phone in your pocket, the AI assistant you talk to, or the car you might drive one day.
Absolutely. Lots to think about. Well, that's our time for today.
Always goes quick.
It does. Remember, we are here to help here at Snarful, so reach out on our website if you have any more questions.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.